we've had a sharp reversal from that opening low. Dow's only down 44. Let's get to Bob.
And only down 6, Carl. Obviously, the president didn't sound terribly enthusiastic about the whole negotiating process yesterday, and that's weighing on the markets. If you just take a look here, here's your banks down as yields have moved back down. Transports, which was a big market leader, weaker. Semis, another trade-related name, and utilities, defensive, not surprisingly, on the upside. We have some other hot spots in the world, though, independent of the whole trade issue. Just want to point out, Hang Seng, 3 days now of demonstrations over in Hong Kong, and look at that. It's rare when you see the Hang Seng down 2% on an overnight basis. It's down about 5% in the last few days. This is starting to show up on commentary on trading desks when you start getting a 5% decline in a major market like that in a few days. So keep an eye on that. And in Spain, well, the socialists over there are forming some kind of coalition. Podemos is the lead socialist group over there, and they don't like banks particularly. They want to put a big tax on the banks. So all of the banks, particularly Spanish banks, obviously, are to the downside. If you take a look at some of the European markets, and not surprisingly, with the yields lower, Banco Santander, Bilbao, these are Spanish banks, but even ING, which is Dutch, Intesa Sanpaolo, which is in Turin in Italy, all to the downside. But remember, these banks have had big runs in the last 2 months or so as they've come off the lows because yields have moved up over in Europe as well. Autos, of course, weak. These are essentially ping pong balls for global trade. They've come off their lows dramatically in the last month as trade prospects have improved, but you can see all of the usual suspects are to the downside today here. Powell's testimony, you heard Stephen give us some highlights about what he's been saying here. The Fed, of course, is the mover of the markets, and everyone expects them to remain neutral. And the indications are that the testimony is going to stay right there. Appropriate is the word that they are using. The question for the market, and everybody's trying to figure out, is what's the range of trading for the 10-year? Is the bottom in, and is there much more upside to the 10-year yield? So remember, we've been in that channel from about 1.4% or so, if you put up the 10-year, to about close to 2% here. Here's that channel that we've been in, and everybody's trying to figure out, are we going to go break above that, or are we going to just stay in this channel? Goldman Sachs was out this morning with a note, very interestingly, that weighed in on this whole prospect, and they said a major portion of the bond sell-off is behind us, essentially saying that the yield spike we've seen, we've about hit the limit of that. The 10-year Treasury, they say, will struggle to stay above, to get above 2.2, and I said 2% was the high we saw recently, and central banks setting a high threshold for future changes. So essentially Goldman is saying we're range bound right now, and that has a lot of implications, Carl, for where the banks have been. That big rally, according to Goldman, implications may be essentially done.